Hello, everyone, and welcome back to the G22 Report. I'm your host, Johnnie Market. Y'all know that drill. Smash that like button, subscribe if you haven't. Just a little disclaimer, nothing should be construed as financial investment advice. So just my opinions, thoughts on the markets, and a lot of interesting things happened today. As you can see, everyone thought with the CPI that inflation was cooling. Well, I don't think tariffs are having much of an effect, honestly, but I think it's a lot of Fed policy, expansion of money supply, asset price inflation that's going to the markets. I think this is what it is. And you have to remember this inflation happened before Trump was presidency. Now, he is his response to COVID is the main thing, culprit. So it's sort of weird because we had a president, one in between and a new one. So I'm not saying the other one's not at fault. Joe's not at fault, but did start with him actually. But it wasn't the tariffs, and this is why the media gets it all wrong. It was the COVID response. They should have let the economy crater and fall, and a lot of this nonsense, because the economy was crashing, would have done away with, and we actually could have had a real healthy recovery instead of an inflationary recovery. So everything bad on that front, but there's no point in rehashing that. But the thing is, the inflation wave that started is not over. Everyone thinks it's just tariffs, and they want people not to look at the cerveza sickness that response as the reason this inflation's happening. So they're pinpointing the tariffs, but look at the PPI, 9%, way higher than expected. Initial jobless claims was actually lower than expected, but the PPI astronomically high. And this is what I thought about. I remember I said the last inflation reading, this was a couple of weeks ago. I went on a hiatus on videos, but the reason inflation was so bad or was so low was because it's more of a reflection of the economy. And I think that's what the CPI. And I think the consumer is so stretched out that companies, the reason the CPI as opposed to the PPI, but the PPI, these businesses are not stretched out. If you look at them, they can handle. So what they're doing is we're just going to eat these costs now. We're going to eat these costs. Because the last thing they want to do is lay people off and then raise prices. Was layoffs are everything. So what I think they're doing is they're eating these costs, and that's why the CPI is not as hot as everyone thought. And because the consumer, and the other thing is they know they're going to lose a customer. So instead of charging, a lot of times retail stores, they'll buy something, they'll sell it at triple the price. They're like, okay, we're going to sell it at double the price, and we're just going to lower our margins because I'd rather sell something for a lower margin than lose a customer and we pass the cost on, but when no one buys them, are we really passing the cost on? And then we have to liquidate it at a loss. So I'd rather just lower our margin now, keep the customer instead of having to liquidate this product at a loss in the future. So that's what I think is happening is it's margin compression. PPI hotter than expected. They had no idea. And then if you look up, where did the CPI go? They literally, I thought the CPI, of course, they can't get it. Well, the CPI came in maybe Tuesday. Let's just go to this week, of course. Yeah, see, core inflation rate 3%. U.S. inflation 2.7 instead of 2.8. So the CPI was like 2.7, 3.1. They do like 4 different CPIs. I think the main reason is because if the market wants to go away, they just pick one of those to emphasize. But PPI is at 9%. They're eating their margins, and they have to, because if they raise prices, they lose the customers, and then they lose money anyway. So it's margin compression. That's what's happening if you look at it. So tomorrow we have retail sales. I don't know if I'm doing a video or not. I just had a couple of minutes, so I decided to do a video. This is one thing I wanted to share with you. I was looking at gold and I was watching it, and I was like, this is a very, if you look at this chart right here, if you can follow around my mouse right here, 325, 3,200, 3,225, 27, somewhere around here. And then this is 3 months later, it's around 333, up a little, maybe. I don't know exactly what the return is, but you can tell it's really basic. And if you look at it on a 6 months chart, if you look at it 3211, then 335 again, and you look at it, it's really going sideways to up. I mean, these are lower lows, but then lower, low, lower, high, lower, high. Uh, that's, I mean, doesn't matter. It's still sort of trending up if you look at it. And if you look at it from a year to date basis, it's at like 2,600. If you look at it starting from April of 2025, that was the top. Bottom was in May of 15. And if you look at it, it just keeps chopping. It's sort of like a triangle, and I think it's going to break out. 1 year basis, same way, that sort of triangle, it's still coming up. I'm not a technician, not a technical analysis, and remember, I'm not a financial advisor. So if you look at it, it's really, and then you go on the 5 year, it's sort of, this is bullish how it's consolidating. It's consolidating sideways. It's not consolidating down. It's not consolidating. Like if you look at 2011, it was consolidating down. I mean, this isn't a great chart, but it's consolidating sideways, and I think it's going up. See, this had a big down, and then eventually consolidated, but cup handle, wow, that is. The only thing I like to see is I like to see the juniors really. Some of the juniors, like New Gold is at 5. I own it, not a buy or sell recommendation. But in 2011, New Gold's around 10 or 11. So I'd like to see, and it has many more assets. So that's not enough. I'd like to see like Bear Creek go to like $5 or something. I don't own that. And they had a going concern on their last financial. Nothing's investment advice, but if you look at it just a year to date, right here, it's consolidating bullishly sideways based on I've seen a lot. 1 year chart, if you look at it, that's a bullish consolidation in my opinion. I don't know. We'll see. And in terms of the markets, the PPI, this is generally a sign that the stock market will continue to go up. Dow Jones only down 11. If you look at it, the dip was bought. Really just went down, came back up, went down again drastically, and then was just bought in the close. So, I mean, they're going to do whatever they can to prop these up. But I don't know exactly. But as I said, Buffett, he didn't resign this year, so no calamities. S&P was up 1 point. NASDAQ was down 2 points. So we'll see what happens. And they can only do this for so long. And I'll get into it. And I think this is happening with stocks too. But you look at Chipotle. But the real economy, let's go into this. Chipotle, Cava, and Sweet Green. These are high end. Sweet Green, I'm not a fan of. Cava, I think, is fantastic. And they actually have cane sugar in their soda anyway. So that's a good thing. Chipotle, I think, it's really good. I mean, yeah. But anyway, look at it. Cava stock fell. Tough period for some of these are favorite office lunch spots. So as you can tell, a lot of these companies, corporate America, they're not doing well. They're not able to, because of the margin compression. Remember, back to the day, the margin compression, they no longer can have those office lunch. They no longer can pretend to keep morale up and act like everything's great with an office lunch, or say, hey, maybe these plebes, we give them a meal at Kava today, maybe they'll be okay. Sweet Green, Chipotle both recorded same store sales decline. Look at this, larger than expected gross slowdown than for Kava. So you can tell they're not doing well, less front footed, less forward leaning. Same store sales at Kava rose, but I think that's part of it. Like they have cane sugar in their soda, they're not the syrup. I think it's good food. It's probably healthier. Chipotle same stores fell 4%. Ongoing consumer environment. Yeah, consumers broke. So, and then Sweet Green had the steepest decline, falling 7.6%. So now I like Kava. I think it's good. Some of the customers could have gone from Sweet Green to Kava, but look at this. And when I said like these companies, they did all the research on all the turnarounds, these big corporate CEOs, especially Starbucks and all that. But what they didn't really research was the economy. They didn't realize the economy is horrible. This is the new America. Pressure on consumer spending for many consumers has persisted longer than we expected. Yeah, well, it's going to persist a lot more. So get used to it. So look at that. These are good, higher end, I guess, fast food, but they're struggling. And this is good, solid, healthy food people would want to go. So anyway, look at this. Traders. I always said they're gonna lower rates, and I wouldn't be surprised to see more QE, but not just yet. But traders, they're increasing a Fed to cut rates at half a point again next month. So, and I think that's why there wasn't really a big sell off, is I think they still expect traders to cut. So, other things in the real economy. This is why I said 2030 about bankruptcies and everything, because the main reason the bond market was propped up was foreigners, but this is another reason is a lot of the multi corporation corporate America elite. They talk about being in different markets. I remember in business school they said you got to globalize, got to be in different markets because if one market's doing poorly, the other one's doing well. They've been so denationalized, but Wells Fargo suspends China travel after employee exit ban. And this is what they don't realize. You can go into different markets, you can do whatever you want, but they're always going to view that company as an outsider. Like when Russia got into a war, they suspended Visa, they kicked McDonald's out. McDonald's there in Russia is because of the fall of the Berlin Wall. It's considered, believe it or not, and I know this was, I know a lot of Russians. It is considered a symbol of freedom. So they like having it, but they kicked it out because they view it as an American company. They do not view it in their heart. So banker was blocked from leaving the country. Border anxiety and risk of travel. This will probably start happening next decade, and it's going to be a real problem for U.S. companies because they're talked about globalizing and importing foreign talent, and they weren't investing their resources in helping American talent. So it's really going to come back to bite them next decade. But you saw it there with the Wells Fargo and China employee. This is one reason, though, that home prices haven't crashed yet this year. They will, but this is always foreign buyers sank 56 billion into U.S. homes over last year. Sales are really plummeting because you need the U.S. consumer to sustain, but this is why I said you don't know exactly when. Foreign buyers are finally unpacking their wallets. Florida seems to be your favorite landing script. So Florida's having trouble. But this is from between April of 2024 to March 2025. But if you look at it, this is one reason you can tell the market. Look at number of existing home purchases by foreign buyers. This is what really kept the housing market up last decade. After the housing crash, you can see 2012, and it's just really 2017, and that's the pandemic. And you can tell BlackRock and everything sort of replaced them, but it went up from 2024, but it's going down. But I mean, the top foreign spenders. Think what you like. I'm not going to tell you. China, 15% of the deals. Canada, 13, which I think that's going to come down. Mexico, 8%. India, 6, and UK, 4. So, Florida's the top, but California second. Texas, New York, and Arizona rounding out the top 5, which is actually California is doing well, but like Florida's having problems. Texas is. Now, New York isn't, but Arizona. So it's actually ironic. So anyway, that's one thing to look at. It's very hard to look at the US market because it is sort of global and dynamic. So you look at the US consumer, you look at the consumer, you're like, why aren't things crashing? But there's a huge amounts of foreigners trying to come in to these markets. So, and that's why they want that golden visa or whatever it is. You pay 5 million for it. But because you never know, sometimes foreigners come in just to make up for the share. It measures economic activity, not economic activity by Americans. So this is also interesting. Oh my gosh. Just download extension. Let's see. Let's get rid of this. All these. So, and speaking of foreign, this is one reason in 2030, I think this is going to completely. Canada shines brighter than US in 2025 travel rankings. Ontario becomes the go-to destination for Germany, UK, France, Netherlands tourists seeking. Uh, so it's stagnating American tourism, and that's one reason you see the jobs declines. I talked about this. A lot of these travel agencies, they don't, or travel jobs relating to tourism are no longer there because it's not just Canada, but it's foreigners. They're not going to the US anymore. So they are, and this isn't going to stop. And it's not just a Trump thing. Growing number of European travels turning their attention to Canada. So there it is. Now, this is one thing I also want to talk about. And this is the other thing. And these are our things on the economy. And I'm trying to get when is this date? I wish they would just have the date on like as soon as the article, so you know if it's outdated or not. I don't think this is outdated because I saw this. This was the other day. And this is the Wall Street Journal. Oh yeah, look, 1 hour ago, 8:14. So Canada has a prohibition on US alcohol, and so Jack Daniels, Maker's Mark, they're nowhere to be found. Thousands of bottled wine and spirits. So Canadian drinkers are turning their noses at American alcohol. And this is going to really hurt a lot of jobs because it's not just this, but I was reading somewhere that Gen Z is drinking a lot less than, I'm going to take off my screen, than previous generations before them. And I don't think they're drinking less because they want to. I think they're doing it out of survival, out of necessity. So yeah, here it is. I forgot to put this up, but Gen Z is drinking less. A lot of people talk about social media, other things. Who doesn't like a good whiskey or beer to last? Another reason I think is you go to Europe, the beer is like 20 times better. Beer in America is trash now. So wine's okay, but you compare our wine, beer, especially compared to Europe, and food is just complete trash. So I think it's a lot less quality. I think like when my age group, millennials and Gen X, and even boomers, when they had beer, where it's Budweiser or not, it was much better quality than it was, especially Blue Moon. I remember that when it first came out, that was fantastic. It's not as good anymore. So I don't think it's the healthier living if you look at Americans. I think what it is Gen Z is probably the poorest of generations based on what I read. I'm not saying that to insult them or anything, but so yeah, alcohol's expensive. Go try order a cocktail at a bar. It's expensive, so why pay for all that? And so yeah, that's what I would say. And then if you actually look at that combined with US wine exports to Canada, if you look at this, really going down. So, they don't have the international presence. And so the US distilleries, look at that. This is like February, just really down. So, anyway, I don't know if I'm considered a doomer or not, but let's go to this. 8 best places to be if US society collapses. So, the Ozarks. I don't know if I agree with that. Northern Idaho. I definitely agree with that. You can hunt, fish. Yeah, I definitely agree with that. I mean, the Ozarks do have like water, so maybe that's an okay. I would prefer a port, but I mean, I guess hurricanes. Western North Carolina, Appalachia, they do get disasters, so I would not rank North Carolina. Michigan, don't know anything about. Central Utah, that's probably pretty good. Inland Pacific Northwest, Washington, Oregon. There's a lot of forest fires, so I would actually rate that down. So right now, I would say Michigan and Idaho. Uh, Idaho is right next, but I don't know if they're really. Alaska, yeah, that has all the resources. Then Vermont, which I don't know much about. So anyway, remember, nothing should be construed as financial investment advice. These are just my opinions, thoughts on the markets, and I will talk to you later.